Welcome to the Shepherd's Wallet podcast, financial guidance that speaks pastor. I'm Seth Scott, and I help ministry leaders navigate the unique financial complexities that come with answering God's call. Pastors face one of the most complex financial situations of any profession, yet there's a shocking lack of targeted, useful information available to help them. That's what we're here to change. If you've ever felt overwhelmed by housing allowances, confused by SECA taxes, or frustrated that generic financial advice doesn't address your unique ministry situation, you're in exactly the right place. It's pumpkin spice season, which means pastors everywhere are updating their housing allowances, or at least they should. But what if I told you that trying to maximize your housing allowance might actually be costing you money? Today, we're flipping conventional housing allowance wisdom on its head, and if you're taking a housing allowance, you're not going to want to miss this episode. Let's dive in. So it's fall, which is hands down my favorite season. I love the crisp weather. I love the leaves changing color. Even though I'm colorblind, I still get some enjoyment from that. It's just overall my favorite. It's also the season that pastors should be updating their housing allowances because you got to get in before the end of the year with your updated request so that you can enjoy a new housing allowance for all of next year. So I would love it if every pastor just had this Pavlovian response. You know, the first time you order your pumpkin spice latte, you should think, oh, I should also be updating my housing allowance request for the next year. That would be fantastic. So this week in my blog, I wrote a detailed guide to determining your fair rental value, which is one of the legs of your three-legged stool of your housing allowance, right? Just think of a three-legged stool. You can only sit as high as the shortest leg, and that's how your housing allowance tax benefits works. Just real quick as a refresher, the three legs are the actual amount designated by your church, the amount of your actual housing expenses is the second leg, and your third leg is this thing called the fair rental value of your home furnished plus utilities. And it's that third one that sort of gets lost in the fog. A lot of pastors don't know how to calculate their fair rental value, and fair enough, there's not a whole lot of guidance out there. And so on my blog this week, I wrote a detailed guide on the actual system that I walk through with my clients when determining their fair rental value. It also has a link to a free housing allowance tool that you can use. Feel welcome to download it. It has a full documentation system as well built into it, and it walks you through the system that I've developed of calculating your fair rental value. So there's a link in the show notes for this. I recommend that you go and download that tool and check it out. Again, completely free. But for today's podcast episode, I wanted to talk about something that I've noticed, and I'm going to share with you a story. This is an actual client I met with a few weeks ago. I was wrapping up an extension for this client, and I said something in this meeting that made her stop mid-sentence. I told her to think of her housing allowance as a discount rather than as free money. And the look that she gave me was just this confused. Wait, what? Is this completely backwards of all of the advice that she had heard about her housing allowance from other pastors? So I would like to really address this mentality because I think that this advice is prevalent in the pastor community. You know, pastors telling each other, oh, you really need to maximize your housing allowance. You need to blow out your spending. You got to make sure that you're substantiating that housing allowance. Otherwise, you're giving more money to the IRS than you need to. So I just want to dive in on this episode because I see this all the time. It's like seeing a speed limit sign and then thinking that you have to drive that fast, regardless of the conditions on the road. Like maybe you come to bumper to bumper traffic. And you're like, well, I have to drive this fast. And so you end up going into the median and going that speed limit. Or there's debris in the road and you don't slow down. It's like, well, I have to go this fast because that's what the speed limit says. That's how a lot of pastors are treating their housing allowance. They see that fair rental value, or they see that document from their church that says this is your housing allowance, and they think of that as their spending limit. I got to spend this much by December 31st, otherwise I'm leaving money on the table. So the housing allowance is amazing, but it's not magic money from heaven. All right. So I'm going to blow your mind with some simple math here. So the reality is that most pastors, or at least the plurality of pastors, end up in the 12% federal tax bracket. And so, what that means for your housing allowance, and I'm not considering state taxes. If you're in a state like California, like me, where you have high income taxes, it's actually more, it's better than that for you. But let's just take the federal rate. So, if you're in the 12% federal tax bracket, which a lot of pastors are, that means that your housing allowance saves you 12 cents on every dollar that you spend on housing expenses. So let's think of an analogy here. Let's say that you got a 12% off coupon to Ashley Furniture in the mail. You get that 12% coupon. Do you immediately run out to Ashley Furniture and go and replace every piece of furniture in your house? No, you don't do that because furniture is expensive. And if you don't need it, then there's no need to buy it. The 12% coupon isn't magic money. You're still paying 88 cents on the dollar for retail price for that furniture. Now, if you happen to need furniture, that's great that you have the coupon. You get a 12% discount. You can buy the couch that you need or whatever. But you don't need to go and generate as much spending as you can, thinking that that 12% coupon is actually going to save you money. And yet, this is exactly what many pastors are doing with their housing allowance. I've known pastors who have bought hot tubs for their houses, quote, for the housing allowance benefit. I've known, couples who have upgraded their home that they couldn't afford on their modest pastor's salary, thinking that they had to do that because, quote, they're leaving money on the table if they don't. Uh, this is completely backwards thinking when it comes to the housing allowance, and I'd like to dispel that myth that the housing allowance benefit trumps natural stewardship principles of frugality. So think of it in terms of opportunity cost. Every dollar that you spend for a 12% discount is a dollar that you're not investing for future growth. It's a dollar that's not going towards your emergency fund. It's a dollar that is not invested in your kid's college fund or in your retirement fund. Sure, you're getting 12 cents off every dollar that you spend for your housing expenses up to your fair rental value. But if you were to take that same dollar, even after your 12% tax rate, and invest the difference at an 8% return, in a year and a half or 2 years, you've made that 12%, you've made those 12 cents back, and it just continues to grow for the rest of your life. So that's something you could put again for your kids' college. That's something you can put into your retirement account. That's even something that can fully fund your emergency fund. I've mentioned the 5-10-15 rule that I've developed for pastors. The 5 is for 5 months of expenses in your emergency fund. That's a good amount of margin on a modest pastor salary with the specific risks that pastors have. You're maybe one board meeting away potentially from losing your position. You're going to want to have a little bit more than the normal 3-month margin that most people talk about. So let's think about housing allowance the right way, and let's reframe this benefit. The housing allowance makes necessary housing expenses more affordable. It is not an incentive to maximize housing spending. I'm going to say that again. The housing allowance makes necessary housing expenses more affordable. It's not an incentive to maximize housing spending. It's a blessing that helps offset the unfair tax burden that pastors face under current law, but you should use it wisely, not wastefully. Let's put in some biblical perspective here. 1 Corinthians 10:23. Paul is saying everything is permissible, but not everything is beneficial. This is perfectly applied to the housing allowance. Just because you can get that 12% discount on your housing expenses doesn't mean that you should max out your budget with housing expenses just to save money in taxes. Another one, 1 Timothy chapter 6, verses 6, through 8. Read the whole thing, but it starts out, but godliness with contentment is great gain. I think the law of frugality that applies to normal stewardship principles trumps the tax benefits that you get as a pastor with your housing allowance, right? Stewardship isn't about maximizing tax benefits, it's about implying wisdom. And again, wisdom is understanding that the housing allowance is not free money, it's just a coupon. In most cases, a 12% coupon on housing expenses. Yes, you still need to know your fair rental value. So that's good stewardship as well. So, making sure that your FRV is as high as it can be at least means that you're not artificially dampening your housing allowance value. So, you do need to calculate your fair rental value correctly. It's the ceiling on your benefit. And if you're getting it wrong, and if your necessary housing expenses happen to be higher than the fair rental value that you're artificially keeping low, then you really are leaving money on the table. So, again, I've written a detailed guide on exactly how to do this. It's this week's blog post. I'll put a link in the show notes. But here's your quick version of what this is. It's a 4-step process. The first step is look at real estate estimation tools online. I'm thinking Zillow and Redfin are the most popular. You put in your address on Zillow.com or on Redfin.com. You scroll down to where they have the rental estimate, and that tells you pretty close what you can expect to rent your house for each month. Now, some caveats on this. The most important one is that this is assuming an unfurnished residence, right? And the IRS code for ministers specifically says that your fair rental value is for a furnished residence plus utilities. So there's a couple adjustments in there you have to make if you're relying on Zillow or Redfin. The first adjustment is for a furnished residence, and 15 to 20% in most areas seems to be what the premium is that you can rent out a furnished versus an unfurnished place for. So, take whatever's on Redfin or Zillow, multiply it by 15 or 20%, depending on your area. And that's kind of your furnished rental. And you also want to add your utility costs on top of that. So, whatever utilities that you've spent throughout the year, add that to your fair rental value. And then that becomes your FRV. That's, usually the tallest of your three legs in the three-legged stool. So that's the first step. The second step is a website called furnishedfinder.com. I want you to go to this website and check it out. It's really cool. This is a place where users can, sort of like Airbnb or VRBO, they can rent their furnished place to people that need long-term stays. So, Airbnb and VRBO do have long-term stays on there, and that can also be a furnished resource for you to look for comparables to your place. But Furnished Finder is great in that it's really going after this long-term rental place. And so again, I go through how to think like a realtor and how to look for comps, how to find listings that are similar to your house, and then look at what they're asking for a furnished residence. And that gives you a pretty good idea of, another way that you can calculate your fair rental value. The third step is to talk to a realtor and to get a BPO or a broker price opinion, and make sure to get both sale value and rental estimates. They'll often do it for free for you, especially if you've worked with them before. So getting a professional opinion is also nice. Again, you'll have to add the furnished premium on top of that, and you'll have to add the utilities. And then the fourth step is to get in the habit of doing this every year. The tool that I provide you can be retrofitted for any year that you want. It also helps you track your housing expenses, which is lovely. And so there's your 4-step process there in a nutshell. But I do recommend going to the blog post. And again, I'll put a link in the description. Now, what the housing allowance helps you do is to right size your housing allowance request. I like going with the Goldilocks principle. And again, it's along the lines of the stewardship principle of not blowing out your spending and just maximizing your housing allowance benefit. What this tool does is it looks at your actual spending, and then it helps you calculate your fair rental value, and it sort of takes the lower of them. If your spending is higher than your fair rental value, your maximum benefit can only be your fair rental value anyway, so that's the request that it puts into your board. If your spending is less than your fair rental value, and I think most pastors fall into this category, then what it'll do is it'll add a 5% buffer to your spending just to give a little bit of leeway, and then that's what it asks for. It doesn't blow it out and say this is the maximum that you can ask for the fair rental value, so therefore we're going to ask that much. There are some issues with asking for a higher housing allowance than you're actually going to be able to substantiate with your spending. And I go into details about that in the blog post. So we want to right size our request. Now, the nice thing about being in a situation where your fair rental value is higher than your usual spending, if you do have a year where you legitimately do need to have more spending in your housing. So say you do need new furniture and you've been saving up and you're ready to buy it next year, or you have a renovation that you've been planning and you do want to do that, then you have some so you have some wiggle room in your fair rental value in your housing allowance ask. And so maybe for that year, if you know that you're going to be spending extra, you can ask for a higher housing allowance that year as long as it's not higher than your fair rental value. In that case, it is nice to have that 12% off discount because, again, this is spending that you were already planning on doing. So, and making sure that you're keeping an eye on your housing allowance every single year about this time in fall to get it in before next year, you can really plan ahead. And if you do have extra spending, you can maximize your benefit, which really is phenomenal. But in most cases, you're going to want to keep your ask close to your actual expenses using that Goldilocks principle. All right, so here's kind of your practical next steps. So calculate your actual housing needs first, and then tax benefits second. Don't let the tail wag the dog. Don't let the tail of your tax benefits wave the dog of your actual budgeting and household spending. If you do need something for your home, celebrate that you get the discount, but don't use the discount to justify buying things for your home that you don't need. Right? So build your budget based on stewardship, not based off of saving the most amount of taxes as you possibly can. If you save 12 cents in taxes in order to get 88 cents of spending on something you don't need, that's not a win. So, questions to ask yourself: would I make this purchase if there was no housing allowance? Another question to ask: is this improving my family's life, or am I just chasing a tax break? And the third question, and perhaps the most important: what else could I do with this money if I invested it wisely? That's the opportunity cost question. So, if you're ready to get serious about your housing allowance the right way, I've got two resources for you. First, grab that free housing allowance documentation tool, link in the description. It'll help you calculate your fair rental value properly, and it'll also create this audit-proof documentation system. Just click on the link in the show notes. And I also recommend reading the blog post from this week where I talk about walking through this. And secondarily, if you're wondering whether you've been optimizing your taxes correctly on the whole, or if you've been falling into some of these traps that we've been talking about, let me review your latest tax return. For just $95 after discount for first-time clients, I will personally review your last tax return and show you exactly where you can improve. It's perfect timing as we head into year-end planning, and that link is in the show notes as well. So remember, friends, the housing allowance is a wonderful benefit that helps level an unfair playing field. Use it wisely, but don't let it use you. Tax breaks are not an excuse for poor stewardship, and buying things you don't really need falls into that category.
Thank you for joining me on the Shepherd's Wallet podcast. I hope these strategies help you steward your sacred capital with greater confidence and peace. If you found this helpful and would like to go deeper in your stewardship journey, join the Shepherd's Wallet community at shepherdswallet.com/join. You'll get weekly live Q&A sessions, pastor-specific financial tools, and a community of fellow ministry leaders committed to faithful stewardship together. Also, you can pre-order my upcoming book, Shepherding Your Finances. It's the comprehensive guide to everything we talk about on this show, plus implementation worksheets and strategies you won't find anywhere else. Pre-orders are 35% off for a limited time at shepherdingyourfinances.com. Thanks for listening, and remember, you are worthy of double honor, including the honor of proper financial guidance. See you next week.